Good morning, and today we thought we would do a little live on how to account for accruals, which follows a question that Marcus asked earlier this week. So Marcus asked how to account for electricity accruals, in particular when your invoice comes in quarterly and your cost needs to be accrued monthly. And would you use an average of the last month's bill, or would you just use a fixed value? Well, as with many things in accounting, a lot of it depends. So the way I would do it is to look at the last quarter's electricity bill and then consider what's reasonable. So sometimes you have quite severe fluctual changes in seasons. So if you're heating a big warehouse or a big office in the summer, it would be a lot more expensive than in the winter than it would be in the summer. If you've got a building that has quite a lot of air conditioning in because you're cooling servers, then that's likely to be more expensive in the summer when you've got your aircon on than it would be in the winter. So what I would do is look at the last 12 months worth of costs and the last 3 months and just make a sensible provision. So let's just jump into Xero, and Harry's going to do a little demo for us. The way I would do it is, say we have accruals that we want to put into January and February for electricity. So we've got some gas in there. Actually, let's accrue £103 for gas, because here you can see that you've got £100 in the previous month, another £100 prior to that, and £129. So 110 seems about reasonable. So I would accrue £100 for £110 maybe for gas. Going into our manual journals, and we're going to make a simple reversing journal. Take off the checkbox to show journal on cash basis reports, because we're accruing for a cost that we haven't received. It's got nothing to do with cash. And then Harry's just going to accrue, say, £110 for gas. No, actually £105 for gas, I think. So a simple accrue for gas charges, and that's going to be in February.
It's a leap year. Ooh.
Yeah, and then reverse it into March.
Just going to copy the description down.
Yeah.
And the account, of course. Utilities gas, and we're using the accruals account code as well. So now we want to add the cost, and we said £110?
Yeah, 105 because it's a bit lower at the moment.
105. So we're going to add 105 as a debit account. So because it's a cost code and we want the cost in February, we want to debit our account by £105. And then next month we want it to reverse the effect, and we'll show you why and how this looks.
Yeah, now normally we wouldn't do this accrual in February until we'd got to the end of the month and we knew that this bill hadn't been received yet. But for the purpose of the demo, we're going to assume we are at the end of the month and we're going to post it now. Now if that bill then comes in March, it will offset. The reversing journal that we've already posted will offset. So you just need to refresh
no cost
the screen.
in February at the moment, and now we have the £105 provision.
Yeah, which is what we want. Now we can see that we've got no cost in here at all for electricity, so we've got nothing to go on. But again, for the purpose of the demo, what we're going to do is accrue £100 in January and £100 in February and have them both reverse into March. Let's assume that our quarterly bill is going to come into March. Now in this instance, what I'm going to ask Harry to do is use a 9-digit short code at the beginning.
Now this is very useful to have.
Yeah. So if you did ACLE and then say Q1, so it's 8-digit in this case.
Whoop.
So we often use a short code within our journal so that they're easy to trace, and we'll show you why in just a moment.
Yep, they come in really handy. So let's
do one for the 31st January, reverse on 1st of March.
Yep. We're expecting to receive the invoice in March, so that's the logic for reversing it in March. And we've got utilities for electricity, accruals, and how much do we want to provide for?
£100, say.
£100.
And remember, we're accruing the net amount, not the gross amount, so exclude the VAT.
and we are good to post. So once again, debit transaction on the 1st of January, going to reverse in March. So I'm going to approve that one. Now, because I'm planning to do the same in February, what I'm actually going to do is go into my manual journal
and then copy it.
And copy it. So, exactly the same description and narration. Once again, I want to select the date, but this time it's going to be February. And once again, I want it to reverse on the 1st of March 2020. So I'm ready to approve that. And now if I go to my profit and loss report, at the moment I have no costs whatsoever for electricity, but now I do. So I have £100 worth of cost in January and £100 cost in February.
Which is fabulous. Both of those will reverse in March. Now, the reason that we like, this is something that's quite particular to us, and we like to put all of our journals in and have all of our journals reversed into the month that we expect the cost to be in. So if, for example, say that £35 minus subscriptions was the reversal of a journal, it's in your face and it's telling you that you were expecting an invoice and it hasn't arrived. Same here, we've got postage, freight and courier. This could have been something that we'd accrued in the previous month and it's been reversed, but we still haven't had that cost coming in that month. So what you would do is, if you knew the invoice was coming in, you would change that reversing journal and push it out to perhaps March or April when you know the cost was going to come in. But it kind of does half the work for you. Now, and that's one of the reasons why we do this. Now, the reason we use the short code, if Harry goes over into manual journals and goes to look for, so if you copy that short code there.
Well, luckily I've got a list that's quite short here.
Yeah.
But if our list was much, much longer and I was actually providing for, say, 12 months worth of electricity, just as an example, I'm obviously not going to in this example, but what we could do is search and we can use the narration. And because if we have a consistent coding that's unique, we can literally type it in and say if I had accruals for quarter 1, quarter 2, quarter 3, I'd be able to isolate what my accruals are. And it's a really handy way to filter down your journals so you can find these items really, really quickly.
Yeah, and another thing that we do as a part of our controls when we're posting accruals on clients' accounts is if we go into the balance sheet and go into the accruals account.
So just going to update this.
Yeah.
And we can see that in February 2020, we have an accruals account balance of £305.
Now, if you right click and open that in a new tab and then extend that out. So at the moment, it's just looking at March 2020, March to February 2020. If you change that so it looks at Feb 2021, because we know none of our journals go out farther than a year, the control in this account...
Forget, it's a leap year. Threw me off. There is no 29th of February 2021.
The control in this account is that it always balances to 0, so that we know that everything we've accrued has been reversed in a period. Not necessarily the right period, that might change as we go through and do our management accounts. So we use this as a control when we're doing clients' accounts to make sure that we don't have to keep going through and re-reconciling our accruals accounts. So long as this balances to 0, we know that this is correct. Our month-end management accounts will tell us whether they're reversing into the right period. This will tell us that we haven't missed anything.
And that's part of the reason we do the reversal at the time of posting the original journal. Because otherwise the temptation is you post the original and sometimes it's just forgotten about. And then you end up with an accrual balance which is in the balance sheet and it hasn't reversed. And it's harder to find it than to post it in the first place and just edit the value if you need to.
Or to edit the date if it doesn't come in the month that you think it's going to. So that's part of your month-end process, is to make sure that everything that you've accrued in a previous month that has then reversed has also been accounted for in that month.
Yeah.
Now, one of the common errors that we see in clients' accounts when we look at them is things being accrued for but never reversed, or things being accrued for in the prior year and then never reversed, and it creates all sorts of accounting complications. So if you're doing the bookkeeping, there's 2 or 3 things that you can do to make life easier for yourself and to build in checks to your own process. So one is always to put the auto reversals in so that you know you've accounted for everything. 2 is to use shortcodes so that you can track single entries or the full series of accounts and the transactions that relate to one type of accrual. So particularly handy when, as Harry says, you've got quarterly accruals that you need to repeat, or perhaps an annual accrual that you need to put through. So something like the Class 1A National Insurance, for example, you might want to accrue a cost for 11 months of the year, knowing that you've got a benefit in kind charge that's going to come out in July, and you want to provide for it in each of those months. So and that's a typical 12-month accrual.
Exactly. And if I was to search in my manual journals and I typed in gas, if I'd had lots of provisions, I can't necessarily identify which one I'm looking for easily, because I could have a provision every single month. But if I have it ordered into quarters, or however maybe I've used the dating convention as well.
Yeah, so sometimes we use the AC elect. So we know it's an accrual, we know it's in the electricity account, and we might use 2018 Q1. So then you can look for all electric accruals, or you can look for all 2019 electric accruals, or all 2019 Q1 electric accruals. So have a simple system for naming your accruals. And we have one particular client who has a fairly complicated training structure. They try to understand the cost of each training course that's delivered. And we constantly get invoices from the trainers that are outside of the accounting period to which they relate. So those, we even go so far as to accrue on an individual invoice basis, because it needs to tag a particular course on a particular delivery in a particular month. So there's lots of things that you can do to make accruals much more simple and straightforward for yourself. Sounds like a lot of work, but it saves the time in interrogating and analysing later.
So as long as you've got the conventions right and in a way that you understand, it's so much easier. Because just as an example again, if I was to search for gas and I happen to be accruing an individual invoice for someone who happens to be, say, gas holders, just as an example, I could search for gas and I'm going to pick up all my gas accruals, I'm going to pick up this invoice for this gas holders account, and there might be other items in there as well. So it just makes it less sensitive. It makes it very specific.
Yeah.
I'm looking for specifically this, and you're not exactly going to see AC ELE written on many items.
No. So common items to accrue for are going to be your utilities that are invoiced quarterly, things like contractor bills, which are often raised on the first of the month, which is really common with contractors. They'll deliver the service for the month of January and then bill on the 1st of February, meaning that you have to accrue that cost in the previous month. Now, if you can't get your contractors to change their billing date to the end of the month that they did the work in from the first of the month, then you do have to put accruals in.
Yep.
Things like commissions that might be payable, and suppliers who are late to invoice. And again, if you have consistent suppliers who are late to invoice, you'll know how much you need to accrue roughly each month.
Yeah, and there's always you'll know who the guilty party is probably the way of wording that. You'll know which suppliers are better at getting the invoices to you on time than others. And if you know full well they haven't provided an invoice, at least you can provide. And I'd probably say err on the side of caution. Yeah. So if you expect their invoice to be somewhere in the region of, say, I don't know, £1,000 to £2,000, I'd err it more towards the higher end, because it's easier to reduce an accrual, because all of a sudden it doesn't wipe out your profit.
Yeah, I suppose it depends on what you're doing with your management account. So if you're the only person, or if you and your client are the only people that are looking at this, it doesn't matter. And we do have clients where we go back and we reduce accruals where costs haven't come in quite as expensive as we thought they were going to, because the only people that see those accounts are us. We also have clients where those management accounts go to the board, or they go to external stakeholders, in which case we try to make sure the accruals are as accurate as possible, and if there's any variation that comes in the following month, we just leave that variation there, because the accounts are committed and they've been delivered. So that's it for today. That's our brief tutorial on how to do accruals and how to control them. We hope you enjoyed that. Please let us know if you did, and we'll see you again soon.
Bye for now. That was a really delayed wave by me.
It was.